All right, what's up with you guys? It's your boy you Kings right here again. It's a new week, and I'm my first student. As you all know, I trade ICT concept, and I share my first educational knowledge on this YouTube channel. So, in case if this is your first time of joining us, please do well to subscribe. Okay, subscribe. It's free, 100% free. Then also turn the notification icon so you're notified anytime I upload on this YouTube channel. Okay, so it's a new week, and as you all know, every week we do pre-market analysis. Okay, we go into the chart, let's see what price is doing, where price is going to next. Right, anytime you go into your chart, you need to ask yourself these three questions, right? Where price is coming from, okay, from the higher time frame, where price is coming from, then where price is currently, and where is the next draw on liquidity. Okay, so you need to know that price books majorly based on liquidity, from internal liquidity to external liquidity and vice versa. And once you follow this, okay, that is the drawn liquidity at each time. Basically, I stay on the daily time frame to determine the drawn liquidity, and that's how I determine my daily direction bias. Okay, so once you determine the next drawn liquidity, what you'll be doing is you should be trading in line with the next drawn liquidity. For example, let's say the order flow is bearish and price is coming from a bearish FVG, okay, and reversal having confirmed. What do you need to know now? Number one, price is coming from the bearish FVG. That's where it's coming from. Currently, maybe price have not reached the next round liquidity, which is either sensor liquidity or relative equal lows. Okay, so what you'll be doing now is that you're going to be selling. Okay, so each day you'll be selling until the drawn liquidity is met. That's the sensor liquidity taken. Okay, so once sensor liquidity is taken, you're going to maintain that particular bias until reversal is confirmed for price to return into internal liquidity, or for price to change direction, okay, maybe to the upside. All right, so that is how I trade, keeping it very, very simple. Okay, so you don't need to complicate things. Maybe if you don't know how to determine institutional order flow, please do well to join my free Telegram channel. Okay, just type UFI Trade Hub on your Telegram channel and join it for free. Then the pin message, here we have all my free classes, okay, where I taught about institutional order flow, and probably is going to help you a lot. Okay, so that's it. It's very, very simple, guys. So I'll be taking you guys to the chart. Let's see what price we're doing. As you know, I trade just one pair, which is EURUSD, so I'll be analyzing EURUSD and DXY. Okay, maybe some other time I will maybe looking at other pairs. Okay, so maybe you can suggest on the comment section. I'll be looking at other pairs, then we'll be analyzing it together. Let's see how it does. Okay, but remember, market is always probabilistic, so anything we analyze, we're working on confluences, okay, with what you know. Okay, it doesn't mean that it will happen 100%. All right, so we cannot be right all the time, but most of the time, following the institutional order flow, our direction bias used to play out right. Okay, so I'll be taking you guys to the chart. Let's see what price is doing. Let's see what we're anticipating this week on EURUSD and DXY. So probably DXY, based on correlation, you can use it to trade GBP USD, all the major pairs that is pairs with USD or other pair that is correlated with. Okay, so once you determine the direction bias on EURUSD, you can on DXY, you can still use it and trade other pairs. That's the major pairs. All right, so guys, let's go to the chart.
So, all right, guys, welcome back to the charts. All right, so looking at price right now, what do you think is happening? This is EURUSD. Okay, so we first look at the EURUSD, then I will take you guys to the DXY. Okay, so this is EURUSD. As I said, price books majorly based on liquidity, from internal liquidity to external liquidity and vice versa. Okay, so if you look here, you can see price have been booking majorly based on liquidity. All right, going down, representing internal liquidity, this gap to the downside, internal liquidity to the downside, internal liquidity, you can see to the downside, internal liquidity. All right, so now price fill this gap here now, reaching for this other block. Okay, now we are waiting for Monday. Today is Monday, we're waiting for it. If Monday closed, okay, without taking this high, it means price should be going to the downside. All right, so that's the anticipation. This is the number one anticipation. Now, but before that, Friday closed with what I call flagship pattern. Okay, Friday closed with what I call flagship pattern. What is flagship pattern? Flagship pattern is a candle that closes it's made up of two candles. So the last candle closes the high and low of the previous candle. So looking at Friday candle, okay, you can see Friday takes out the low, the high of this Thursday candle and the low, so confirming a flagship pattern. So this, whenever it forms at a liquidity level, for example, if it forms in another block, okay, it indicates reversal to the opposite side. Okay, so now you can see what I wrote here when I did my analysis in the morning. I say flagship pattern confirming reverse to the downside, kind of a question, because it closed bullish, so normally everybody expecting price to be expanding to the upside. Okay, and this is previous week high. Now with this, now you think price should be going to the upside, right? But this now is a flagship pattern, and most of the time it happens. I use it to determine reversal, right? So now looking at this, now the question is, do you think price is going to continue to the upside or to the downside? All right, but to me, from the confluences I have, this is flagship pattern, and from my experience with the chart, right, this indicates reversal. So it doesn't matter whether it is bullish candle or bearish candle, provided it's flagship pattern, most times used to indicate reversals. All right, so that's why I'm expecting this high to be defended, that's not to be taken, and price to continue to the downside. So now another confirmation is, if today, which is Monday, closes without taking this high, so you take it as swing point, that means we have two reversal confirmation in the daily time frame. So on Tuesday now we'll be selling until this low is taken. Now remember, the overall drawn liquidity now is in the higher time frame, which is the monthly time frame. Now I will take you guys to the monthly time frame. So let me use this. Okay, this is the kind of a swing entry I entered, okay, because I'm backtesting this swing model. All right, so I just saw this informed. I'm bearish, as I entered. Maybe I'll be holding it until this low is taken. All right, so that's it. All right, so we're taking you guys to the monthly time frame now. So looking at the monthly time frame, guys, what do you see now? You can see where price is coming from. Price took this high as a stop watch. Okay, now I've been calling price from here that price should be going to the downside, because there's a gap. There is a gap here. You can see this gap. So you can see this is an FVG. So you can see this gap here. So this is a monthly FVG. So this gap is very, very obvious that price should be taking it, like price should walk into it. All right. So overall, we are bearish on EURUSD. Overall, we are still bearish on EURUSD, and price is almost close to it. Okay, so that's why price is kind of, when price is drawing to a liquidity level, it's kind of a magnet drawing price to itself. All right, so it's already closed. And another confirmation is that previous monthly is taken by October candle. All right, is a confirmation that price definitely to reach it. It will reach. Okay, so with this now, that's why I said, okay, price may not be reversing to the upside now until we poke into this, then before we consider reversal to the upside. Okay, so that's why my confidence is still very strong. It's still bearish. Okay, you can see this weekly candle, right? Last week closed as a contraction candle. All right, I've been talking about this contraction candle. All right, after contraction, you should be expecting expansion in line with institutional order flow. Okay, and most of the times the order flow now is still bearish. Okay, most of the time price used to expand in line with the order flow. So contraction candle, maybe this is your first time of hearing, is a candle with small body range. Check my video and you watch. I will put it on the screen so that you just go through it and learn more about the contraction, how it works. All right, so and we should be expecting expansion to the downside. It doesn't matter whether it's closing bullish. All right, but if price should be going to the upside and take out this previous day low, then it should be poking into this, and definitely the reverse should take this. All right, please don't take my word for it. All right, everything I'm saying here is more probabilistic, but just know that we are working with confluences. We are working with confluences right here. Okay, we are not imposing our bias on the chart, but I'm telling you reasons why price probably will be going to the downside right here. So I'm expecting price to be going to the downside. So invalidation now will be, if this high is taken, this previous week high is taken now, then price will be returning inside this range. Okay, to be returning inside this range, because price have been closing for over how many weeks now? Bearish. Last week closed bullish. All right, so if the high is taken, then price should be returning into at least 50% of this range before it continues to downside. But that downside, definitely price will be getting to it. Okay, so that's my anticipation for the week, guys. That's my anticipation on EURUSD. I'm still bearish on EURUSD. Very, very much bearish on EURUSD. So today we didn't see any entry. We didn't see on the daily time frame. Sorry, as my when I start trading is every on New York Q's one of the Monday, so we know that there was no entry. I was expecting this high to be taken, then entry form I will enter, but there's no entry, so we didn't trade today. Okay, apart from that, my swing trading model, I'm using a different account. I'm just kind of backtesting the model. Okay, I'm still backtesting the model. Okay, all right, on a separate account. Okay, so that's it. So that's it, guys. I'm still bearish on Euro USD. I'm still bearish on Euro USD, and the confirmation for reversal is if this Monday, that's the closes without taking this high, then price should be going to downside. And when price is going to downside, the first round liquidity is it will be this low. The first round liquidity will be this low, okay? And once this low is taken, definitely price will be coming to the downside. All right, so this is a sell side liquidity. Sell side liquidity. So if this low is taken, then price should be definitely coming to this downside. Okay, all right, so confirmation for reversal if today close without taking this high, then we are bearish from Tuesday until this low is taken, then price popping to this. Maybe after price is done popping to this, then we'll be seeing a pullback. Right, so that's the anticipation, guys, for the week. All right, that's the anticipation. Remember, anything can happen. Invalidation will be if this high is taken. Okay, if this high is taken, then price will be taking out the previous week high, but until then we are still bearish. Okay, we are still bearish, guys. We are still bearish on Euro USD. Okay, price have taken external liquidity, returning to internal liquidity, this other block, then we'll be expanding to take out external liquidity, and you have seen it over time. It repeats. Okay, I'll be taking you to the DXY. The DXY probably it will be doing opposite of what Euro USD. It'll be doing opposite of what Euro USD is doing, right? The DXY will be doing what that is the opposite of what Euro USD is doing. The same thing, like the same narrative. Okay, you can see the same narrative, Okay, but the difference is that the DXY have reached if you check the DXY have reached the gap. Let me show you from here. If I check the monthly time frame on the DXY, you have reached the gap. That's the monthly gap. Okay, so you can see price is coming from here as a stopwatch. You know, I tell you guys that anytime you go to charts, we ask ourselves these three questions: where price is coming from. So price is definitely coming from this low, and it have actually taken this high now into this gap right here. So you can see the gap. Okay, so you can see the gap here. So so my expectation is for price to reach at least 50% of the gap. Okay, so if I put 50% of the gap, we'll call it consequent encroachment in ICT. Okay, so I'm expecting price to reach 50% of the gap. So I will write CE, consequent encroachment. Do you know why? Because that of Euro USD have not been met. So definitely price should be reaching at least 50% of this gap. Then once that is done, and another confirmation why you should be reaching there is because previous day high is week month high is taken. So price have higher tendency of reaching for this high. Okay, have higher tendency of reaching for this high. All right, so that's it, guys. So that's it. Now let me take you guys to the weekly time frame. In weekly time frame, the order flow is still very bullish. You can see contraction candle. Last week closed contraction candle. After contraction candle, what do you see? Expansion towards in line with the order flow. So order flow is still bullish. So maybe price should be going down. Forget about this rejection candle. It may be a fake out, right? But don't take my word for it. Anything can still happen. If the low is taken, then we should be expecting price to the downside, right? If this month low is taken, all right. But then I'm still bullish. I'm still bullish now. Okay, so now taking it to the daily time frame, you can see if today closed now, where is price coming from? Price coming from this. You can see this order block. This bearish candle, you can see this is the body of the candle. Let me show you. This is another block. All right, so this is another block right here. So you can see it's reacting to this other block. So if today now closed without taking this low, all right, this low now here, that means we should be continuing to the upside. So it's a confirmation for reversal, and you have given us confirmation last week already by taking the high and low of this previous day candle. All right, so we are bullish on the DXY and we are bearish on Euro USD, expecting price to expand to the downside. All right, so keeping it very simple, guys. So that is the directional bias for the week for me. Okay, that's the directional bias for me. Okay, continuation to the downside. If today close, not taking the previous day high, we are selling tomorrow. We are selling on Wednesday until the draw on liquidity is met. Okay, so that is it, guys.
So guys, that is it. That's the anticipation for the week. That's what we are looking out for on both DXY and Euro USD. Keeping it very simple, okay? Price is actually probabilistic, okay? So, and according to my binoculars, you don't need to be right or wrong for you to make money from the market, all right? So the way I trade is once I determine this direction bias, so I go to my lower time frame, my entry time frame now, and trade in line with the direction bias, okay? So if I am wrong from determining the draw on liquidity, then highest I will take loss for that day, okay? Or probably my setup may not form in line with my bias, okay? So that's it. Keeping it very simple, okay? You all know we are bearish on Euro USD for now, all right? So invalidation would be if the previous day high is taken, and we are bullish on DXY, okay? Invalidation would be if the previous week low is taken, all right? So till then we maintain the bias and make the most out of it, okay? So guys, it's a new week, all right? So for you to actually attain profitability in the marketplace, you need to learn how to follow your rules, okay? So let it be one thing, probably you're going to decide this week, decide to follow your trading rules. And if you're a trader and you don't have a trading plan, it means you're still playing, you're a complete gambler, all right? Okay, so you need to have a trading rules, all right? Then force yourself to follow your trading rules, because personally that's what I did. Like when I started doing it, that's when I started seeing a positive result, okay? So force yourself, discipline yourself to follow your trading rules, follow your risk management plan, and gradually grow, okay? So because one thing is for you to become constant profitable, next thing is for you to grow, okay? So allow yourself to grow, give it to time, all right? Give it to time. Definitely you're going to hit your goal, all right? You're going to buy the Lambos, you're going to buy all the cars, all right? And probably you're going to come and appreciate me for advising you. All right guys, so wish you all the best. If you have not subscribed, please do well to subscribe, all right? Then also like this video, help me share, okay, so I get to others. And if you have any question, you always drop it on the comment section. Definitely I will attend to you, all right? So because I care about you so much, right? I care about you so much. All right guys, so till the next time, I wish you all good luck and a profitable week ahead. See you next time. Bye for now.